Hi all, welcome to TCM Education. My name is Michael and I'm the analyst and content provider here on the channel. Let's discuss in this video, which is not going to be obviously a short one, 4 of the stocks that were short candidates yesterday based on the list that we're going to discuss in a minute. And we'll try to expand more versus the shorts that you can see on our channel and explain why the stock is being chosen, what are the potential entry points, what are the risks per trade, and how you can duplicate this type of patterns into your real life day trading. So let's start first with the list, which is the most important. How you pick out the 9,000 stocks that are trading on the New York Stock Exchange and NASDAQ, the right stocks or the right candidates to short. So obviously, if the market is trending lower sharply, you have immediately short candidates. If the market is trending higher sharply, you have long candidates. But if the market is not doing much, which is what happens over the last couple of months, where most of the trading days are kind of choppy, you need to be focused, and you can achieve focus by concentrating on the weakest stocks out of those 9,000. So how do you achieve it? Of course, you can use a simple screener, but if you have the opportunity, use a more sophisticated one. And I'm using, again, not a very sophisticated, but let's discuss the screener. So I don't want to trade stocks that are under $10, so any stock in this list will be above $10. Then I don't want to trade low volume stocks. So in order to make it to this list, a stock must trade at least 4 million shares, which means some of those stocks will hit the list late in the day. Okay, that's a prerequisite. Another prerequisite is that the stock will be at least 3% to the downside when it enters the list. Now, you need to be careful, because when a stock is down 3%, it doesn't necessarily mean that it's moving down. It has to have a downside trend and over or lower than 3% to the downside. And the trend is crucial here, because a stock that's down 4% can have an uptrend. It doesn't fit the strategy of going short. Of course, the stock must be shortable, otherwise there's nothing here to discuss. And then we hit the most important, let's call it screening criteria, which is the intraday range. Now I know that some of the platforms don't carry this indicator or this option. So in that case, you just need to follow up and check the range on the daily chart. So if the range on the daily chart is above average, then you add a V to the criteria. So if I want to summarize, good volume, doesn't have to be 50 million shares, 4 million, and of course tight spreads, stocks above $10. Intraday change under 3%, but that's flexible. If there are too many stocks on the list, you increase it to 4%. If there aren't that many stocks on the list, you go up to 2%. Again, if the market is moving down, there will be obviously more stocks on the list. If the market is moving up, there will be less stocks on the list. But if the market is moving up, you don't want to concentrate on the short list, you want to concentrate on the long list. And yesterday the market kind of moved lower. Let's call it, it closed negative. And so the range is important, but if you cannot find a range, or the platform is not supporting your platform, then you can use obviously these three criteria, and then you observe the range on the daily chart of the last trading day, and the volume, of course, must be above 4 million. Okay, so this is the preset criteria. Now let's take a look at the individual stocks. Why is HELE of Troy on the list? So first of all, it's on the list because it reported earnings. Keep in mind, guys, that we're hitting any day now the earnings season, and the earnings season will bring a lot of volatility and plenty of short and long candidates. So that's a stock that was down in the pre-market already, I think 15 to 20%. So it looked great as a short candidate. The problem with this stock is that the volume is not that great and it is somewhat spready. Okay, so but it's definitely a short candidate. It's the worst stock out of 9,000 that has this criteria: over $10, trades at least 4 million shares, and it's down over 3%. And the range was at the end was more obviously than what was the range? At the end, the range was 12%. Keep in mind that this is an evolving list. Okay, this is an evolving list, and you don't necessarily use only this list, because there is your normal screener where you can immediately see that HELE is the worst performing stock yesterday on Wall Street. So let's take a look now at the chart of HELE. Okay, so this is the chart of HELE, and not a pretty one. So you can obviously see here the huge gap down. Hold on. Huge gap down. And the stock starts to trade lower, and now again you want to figure out an entry point short, assuming the stock is shortable. And in this case it is shortable. Okay, at least on the platforms that I'm following. It's possible, though, that because of the uptick rule, the fill is not going to be that perfect. Anyway, what is the entry point short? Because the trend is clearly lower, and you want to exercise here a gap down and go strategy. So I'm pointing to an entry under 22.30. Probably there are better entries here. The idea here is that you want to risk as little as possible and enter with a trading pattern that's tested. So if you look at the chart here, you can clearly see that this is the 3-minute, obviously the 3-minute intraday bars. In the morning, had you used the 1-minute bar, you can clearly see that 22.30 was a clear support level that was breached, and then the stock traded lower. So it was a clear entry if you observed it. Okay, and the stop loss 22.30 to 22.60. That's roughly a little bit more than 1% in terms of if I want to quantify this trade. 1% of risk, meaning you take short a $10,000 position, you risk $100. You take short a $50,000 position, you risk $500, and so forth. If you trade using quantities, the stop loss is 30 cents, so that's $300 on 1,000 shares and $150 on 500 shares. So again, the math is pretty simple. And now that the stock moves lower, and your question will be now, where do you cover if you want to cover? And I'm not going to discuss this type of strategy, but the idea here is, again, you want to maximize this trade, okay? Assuming you enter the trade at 22.30. Now, are there additional entry points? Yes, maybe there are. For example, this entry, clearly shorting the stock under 21.20. That's another short possibility, or adding to the trade. Okay, here under 21.20, and the risk is 21. I would say, have to say, when it breaks, the risk is kind of minimal. 21.45. Anyway, the idea here is, again, if you want to take additional trades, take them with very little risk, and try to squeeze as much as you can from this trade by letting it, work. Eventually, the stock closes at 20.70. So, how much is it from the entry? From 22.30 to 20.70, it's $1.50, and that's $1.50 risking 30 cents. So that's 5 to 1. If we want to quantify this trade, 5 to 1 intraday risk overall. Is it a good day trade? Yes, it is. Definitely it is. Anything that's above 3 to 1 is very good. And again, the good thing also about this trade, it doesn't put you in danger because it doesn't turn higher at any point. Let me add the view up. I forgot to add the view up to the chart, and you can see it didn't came even close to the view up, not even once. So a good pick, a trivial pick, and it also worked. So let's try to repeat. Those who are looking for this type of patterns, gap down and go, low risk entry, stay in the trade, maybe add, maybe don't add according to your strategy, but try to stay in the trade and expect a weak stock. That's a reasonable expectation to close at the lows of the day. And when the stock closes at the lows of the day, and this one didn't close exactly, but when it closes at the lows of the day, you have a you have a huge winner. And a stock that's down, in this case 5%, can turn into a 7, 9, 10% winner. And the difference between 3-4% winner and 10% winner is huge, and you're doing nothing for it. You're just letting the stock deliver its momentum. Okay, let's move to the second trade. Okay guys, so the second trade, CC, a stock that we trade, or normal people will trade it once every 6 months, if at all. That's a stock from the chemical business, in the chemical business. So now the stock doesn't give you any hint because as you can see here, guys, it doesn't open with any gap. So by the time it reaches 3% at least to make it to the list, and maybe more, it's already down to from 15 to 14, 20. Now, as soon as you observe it, either through the search or through the normal gainers, losers, or top 20 screener, okay, you can figure out this pattern. So the stock is under the view up, clearly trending lower. And again, the question is, where do you enter? Do you enter at 1480 if you can observe it, or do you enter at this under the view up trade? And again, you want the overall risk on the trade to be as small as possible. So this is a $14 stock, meaning a 10-cent risk is under 1% of risk, which is the case here. And again, is it a big winner? No, it's not. The good thing about this stock is it's liquid. On the volume yesterday was 4 million shares. So again, not a big winner. It can be a big winner if you enter or figure it out very early, which is very tough to do because it doesn't give you any signals. One thing though about the list from yesterday, if you remember, plenty of stocks from the gold sector. Okay, let's move on to the third candidate. And now this is Goldfields. The stock ended up losing 8%. It's also shortable. It's very liquid. It traded yesterday nearly 4.5 million shares. And now, being that it's also a stock that hits obviously earlier the screener, the question is, where do you observe it and where do you short it? And if you a round number trading, you prefer to trade around round numbers, here is the opportunity to trade it short. In this case, short 42, stop loss 35 cents. Again, less than 1%. And another potential adding point. Short 40.80, risk in this case 20.18 and 8.26. Let's round things up, 30 cents. And again, if you look back at the result, is the stock drops from 42 at one point to nearly 39. That's a $3, nearly $3 intraday move. A $3 intraday move is 7.5%. 7.5%. Now we're talking a big winner. It's not a 3% winner or 2% winner, and the trend is unbelievably strong. Could have been a great trade for anybody that followed the gold stocks yesterday. Another stock, and the fourth one, that I want to discuss, not because it was shortable, but because sometimes, again, if you see a stock that's hitting your screener or the building screener, and you can observe a real entry, in this case a stock that's obviously you need to follow up because of the screener, because again it doesn't open up with a big enough gap so you can observe it in the pre-market. Obviously it has no earnings. This is a clear profit taking for whatever reason, and again, if you observe it early, this is not a gap down and go. Okay, this is just a weak stock that you can trade based on a technical pattern. Okay, so those kind of trades can appear on your screen from time to time. Another stock that hold on a second, and this will be obviously the last example from yesterday, although the list is full. Another example is a stock again from the mining sector. This one actually, and this is the weird thing, gaps up, so it's definitely not on the short screen. Then it starts to move lower with this profit-taking mood. And now the question is again, when does it appear on the screen? Does it appear on the screen here or here? And it makes a huge difference, because of the gap up you cannot prepare yourself. And again, why? Because why would you look at the SBSW? Although it has great volume and so, but why would you look at it? There are so many other candidates, and the stock is gapping up and moving counter trend, so you think maybe it's closing the gap. But again, you have absolutely no reason to be following SBSW unless you are, a fan of this stock for whatever reason it is on your watch list on a daily basis. So the idea here is, if you observe it, use the technical pattern, breakdown and the stop loss, and then consolidation and the stop loss. Obviously, yesterday anything that smelled like gold went through a big sell-off day from all-time highs in gold prices. Anyway, this is this video all about 4 stocks out of the list here that deliver great intraday moves. The most important thing is that they all had the same prerequisites: clear downtrend. Each trade did not risk more than 1%, which is super important for day traders. You want to risk as little as possible on any trade, and if your trade is risking 0.5%, it's your option to add to the trade again, or maybe double. If your normal position, let's say, is 500 shares and risking 1%, here you can use 1,000 shares and risk 0.5%. Again, I'm not suggesting that any trade deserves an uptick in the trading volume. Okay guys, thanks for watching, and we'll see you in our next video. Please like and subscribe, and again, we'll see you in our next video. Thank you.